It's interesting because everybody's celebrating this idea of an XRP ETF and the idea of BlackRock potentially moving towards an XRP ETF in the near future, which I think is inevitable because it's very lucrative. But I think few people are actually asking who really benefits when an asset manager like BlackRock takes an undervalued digital asset like XRP and wraps it into a traditional product. So let's talk about it. But before you start celebrating and assume it's a win for crypto, if that does happen and when it does happen, you need to understand something, okay? BlackRock isn't just any firm, okay? It's one of the largest asset managers on planet Earth, controlling over $10 trillion approximately in assets. And they have their hands in just about anything. They pretty much are one of the entities that control the world, okay? And it's funny because when they start eyeing and, talking or even hinting about a potential XRP ETF, whether it's directly or indirectly, it's not always maybe in the investor's best interest. But at the end of the day, it's a calculated move from BlackRock and their shareholders. So what's really happening here isn't about democratizing access to XRP or even unlocking utility for everyday investors like us, okay? And I know it's not what you want to hear, really, but the fact of the matter is it's the truth. It's about control. It's about profit, and it's about wrapping a disruptive digital technology in basically a suit and tie that Wall Street understands and that they can dominate and control. That's ultimately the goal here, while still being as lucrative as possible, which they will get if they successfully have an XRP ETF. So you see, BlackRock and other big players, the other financial institutions, aren't just considering an XRP ETF because it's more convenient, okay? The truth is they're choosing it because it benefits them and their shareholders and not necessarily you, okay? Now, I know many investors aren't thinking about that, but personally I am, because we have to look at both sides of the coin and be logical and critical about what's happening here, not just the hype, okay? So from an investor's standpoint, I do understand that an XRP ETF or any ETF makes it easier for traditional market participants and traditional investors to basically gain exposure to XRP or any digital asset without having to deal with wallets, private keys, or exchanges and all that stuff. And it's convenient, I understand, and it gives exposure to just regular investors. But let me be clear, okay? So while it offers that price exposure that a traditional investor would get from buying an XRP ETF, it actually strips away the utility aspect of XRP that will come ultimately in the future. So you don't actually own the asset when you buy an ETF, okay? Or an XRP ETF, which means you're going to potentially miss out on the real advantages of holding the native token, the digital asset XRP, and especially over the long term. So you see, the value when it comes to XRP is in the protocol. And to own a piece of the protocol, essentially you have to own a piece of the network. And when you own a piece of the network, now you own basically the digital asset XRP. That's how you own a piece of the network, by owning the token, the native token, not by buying an ETF, okay, and getting price exposure. So you may or may not know, but an ETF it's an exchange traded fund. That's basically what it stands for. And basically it lets investors gain exposure to an asset like XRP or even Bitcoin. through the stock market, essentially, without directly owning it, just having exposure to it. So in this video, I'll explain in simple terms what BlackRock isn't telling you, why Wall Street's biggest player wants an XRP ETF, whether you believe it or not, and I'll also explain what it means for you as an investor and why their version of crypto exposure might not be in your best interest. So let's start here. And by the end of this video, you'll have a very good understanding of both sides to the story, and hopefully you'll get the big picture. But we'll start with the first, or one of the first reasons, okay? BlackRock prefers an XRP ETF over the native token XRP. Instead of selling you the XRP, they rather have an ETF of it. And the reason I think is because BlackRock, basically, when they have an ETF, it gives BlackRock a way to offer investors, of course, exposure to XRP without getting their hands dirty, basically. And what I mean by that is in the regulatory gray areas that we're seeing in the crypto space right now. A lot of uncertainty, a lot of gray areas in crypto, so they don't want direct ownership of it, okay? This is the less nefarious reason, but with an ETF, everything's in the SEC's comfort zone, basically. You know, brokerage platforms, custodians, disclosures, all that stuff. So it just keeps them on the right side of the law. So it makes it cleaner and legally safer. And basically the ETF is wrapped all up in regulation. That's pretty much it, but here's the catch. It also blocks investors from true crypto ownership, okay? Because when you own an ETF, or when you buy an ETF, you don't really own anything, and you don't own the cryptocurrency or the digital asset. You can't send your ETF to another wallet like you can when you hold your own crypto. Additionally, you can't use your XRP for anything, and technically, you don't hold it, you don't own it. So it's not in your possession, then technically you don't own it. So in essence, if you buy an XRP ETF, you don't hold XRP, you hold a representation of it. That's basically it in a nutshell. And that's exactly how BlackRock and these big financial institutions want it. It's in their best interest, okay? It's not in your best interest, but it's in theirs. Reason number 2 is steady fees and predictable profits. This one's common sense, but common sense isn't so common. So unlike buying XRP outright, which might, cost you a simple exchange fee, ETFs carry annual management fees. So it's very lucrative for BlackRock and big institutions to do this. So BlackRock's Bitcoin ETF charges anywhere, I think, from 0.25% to about 0.59%. And that, I know that may sound very small until you scale it into the billions under management. And now it's not so small. And that's why hedge fund managers are actually some of the highest paid people in the world. It's a very lucrative business. And an ETF just gives them more stability and predictable income. So an XRP ETF essentially becomes a cash cow for them, and it's just this reoccurring revenue stream with far less operational headache and costs than dealing with wallets, private keys, customer support tickets from, regular retail investors. For example, if somebody lost their seed phrase, all that stuff, that eliminates all of that for them, so they don't have to deal with the headache. Much more easier for them to manage and much more lucrative. Now, moving on to the next point, why BlackRock would prefer an XRP ETF over the XRP native token to sell to its clients. The third reason is control and manipulation. It's much easier. Now, whether you believe it or not, doesn't matter, because that's a fact. And one of the dirty secrets in the world of finance and Wall Street is how ETFs can subtly and easily be manipulated. And that's a fact. So authorized participants, the big financial institutions, they can basically affect pricing, liquidity, and flows in ways that pretty much aren't always aligned with retail investors or investor interest.